The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And the first charts that I put in this morning, I did one on IBM, and it just shows you that if you're looking for a stock to buy in a bull market, IBM is really close to a 61% retracement of the move from February through April. So that would be a low risk buy around that 181 level. And if you're interested in, buying good quality stock in a nice retracement, it's certainly a lot weaker than the rest of the market after having one heck of a good rally, but we'll see what happens from here. I also have posted into the Tiger Den the VIX chart showing the fact that we have a butterfly bottom forming now in the VIX. It's given back half its value since the high from the February 3rd, which was that real important cycle date when the market was making a bottom. We were making a high in the VIX up around 21 at that time. Now we're down at 11. The pundits on Bloomberg were talking about the VIX this morning, saying that basically it had lost its value as an indicator. And well, we've heard that over and over again for sure, but we'll have to wait and see. The next chart that I'm going to post is the long-term weekly chart on the cash S&P. And the reason why I want to do that is I've circled the area around the high in October of 2007. The market topped on October the 7th of 2007. That was also a new moon, just like we have going on now. And so I would think that we were pretty close to something really dramatic in the market, at least to the downside. I'm going to make a prediction that if we close lower on the week, which would be a pretty significant event given the fact that it's so strong, but there's still 2.5 days to go. But if we do close lower on the week, I would call this the high of this leg up, and we would look for a really severe correction at a minimum of 10%. We haven't had one of those in well over a year and a half. So it would be interesting to see if we can, have some type of a correction from here. Remember how bad things were in March of 2009 when the world was coming to an end and everybody was too big to fail, or whatever they were trying to, give us some time of scam, whether it was General Motors going bankrupt or, J.P. Morgan needing money or Goldman Sachs, buying into Warren Buffett and stuff like that. It's just the exact opposite. So these are things that are not expected, but we'll have to wait and see. The safest way to look at it is if we close down on the week. This would be the same thing that happened in 2007. The pattern is certainly there. We've had this long-ranging triangle that has been trying to complete. We've tried several times. We did have one good break into February, but it only lasted for 4 days, and then it turned around. So it still hasn't given signs of wanting to give up. So the thing that I'm watching this week is to see if we can close lower. I believe that price would be at around 1882 in the future. So that's quite a ways away from where we are now. That's better than 26 points away from the present price. So it has to have a pretty good reversal in order to do that. Whether it would be news-driven or not, I'm not sure, but that's what I would be looking at. On the other side of this is if it keeps going up, it certainly can. If you look at the Dow Jones Transportations, it has completed every conceivable target that I can get. I cannot find a higher target on the transportation. I've gone in and looked at it so many different ways, and it's just it's made so many up moves. And normal, because it's been backing off just like it has, but it's just been going higher and higher and higher. And again, as you can see, we are still higher in the transportation, telling us that this is not finished to the upside. But from my perspective, looking at on a long-term, and a short-term basis, there is very little there to make the market want to turn down. We're up 7 days in a row on the transportations, and usually when you're in a new moon or full moon, it'll reverse the market for at least 4 to 5 days. But as of yet, we have not reached that point. So the merry way of the transportation continues higher, and I frankly I just don't see any other price objective. That don't mean it can't go higher, but it certainly is in an area where there are no other ratios up here that I can see that extend up to that level. We took out the 1.618 early this morning, and it's been up all day with the rest of the market, struggling for a little bit anyway, and then has come back at least a little bit. We are up a little bit on the S&P, and also the NASDAQ and the Dow is down just a tad, but virtually very, very little at all. Folks, it's really, I know it doesn't sound very realistic to start to look to protect yourself in here, because when you get everybody, and I know you have pundits on both sides, because people think that it's going to go up forever. I heard two people on CNBC yesterday afternoon saying that it would go up through 2016. Well, if it does, it might, because this is the biggest bull market that we've ever had, and it has also surpassed the one from 2000 and from 2000. It surpassed the one from 2007. It surpasses the one from 1929, and we still have record number of margin buyers, so that hasn't had an effect on the market at all. The low volatility has had no effect on the market at all. The bond market has had no effect on the bond market at all, so there's no reason why it cannot still go higher. I'm just saying that if we do close lower on the week this week, then I would say it would be a place where you really want to be careful, because nothing goes up forever. We know that, but the question is when is forever? That's the $64 question. And it goes up very quietly. I mean, there's nothing dramatic, and we don't have any dramatic news either way. It's new buyers come in or new shorts cover, whatever it happens to be. The one thing I feel really strongly about is that when the market finally does turn and have their, these big corrections that I've been looking for, it's going to be blamed on the people that do this, what they call fast forwarding. Oh my gosh, I have a mental block here. When the automatic trading, that's what I'm looking at. That's what they will do. They will give a lot of the blame to the automatic trading people, and that's my assumption that that's what will happen. I personally don't think that it's a big as deal as Michael Lewis is making in his book, that it's a totally controlled market, and I don't believe that. I mean, it's just the markets. I look at, you can't control everything. You can control markets for a very short period of time, of course, but not for a long time. Especially things, like in the foreign currency, it's just not, you're just not able to do that. So we will keep an eye on this particular formation that we're having now in this final stage of what I think is a pretty substantial pattern. If we take a look at the S&P cash, and I'll put this up here on the daily to show you that we have a really nice three drive pattern coming in at the same time. We've had a gap up, and we have been higher almost all day today. And it shows, hold on 1 second, and I'll move this over just a little bit, and we'll be able to see everything easily, God willing, and sometimes she's not, so hold on. But we do have a very large gap that occurred here over the holiday, and that's going to be filled. The question is when it's going to be filled. If you'll notice, if you go back on May the 14th when we had the full moon, you'll see that the market hung there, opened lower, and then had a really strong correction for 5 days. And then started its last move at this leg that takes the third drive up to where we are right now in the S&P, to see if that's going to do that. We've hit all the numbers in the cash S&P that I was looking for. The Dow Jones has a very interesting pattern, because it went up and matched the old high within 1 point, and that in itself was quite amazing. So whether that's going to be a double top or not, I don't know. I firmly believe in the lunar cycles. You know, I've just finished a book that'll be coming out in about 4 months, and it has a lot of statistics showing the lunar cycles, and they do have a great deal to do with the market. It's beyond the negative probability. The probabilities are so high that when you look at all these cycles over a 100 and some year period, they put the probabilities in your favor. The thing is, they don't work all the time, as we all know. The only thing that works all the time is the 50-day and the 200-day moving average, because if you stick with that, you'll have no problem at all. You buy when it's above the 50 and stay long above the 200. So we'll wait and see. One of the questions that I've had is what happened to the April 21st and 22nd? Folks, I have no idea. I have asked Arch Crawford, I've asked Bill Meridian, I've asked Alfie Lavoie, I've asked Tim Boast, I've asked everybody that I really respect in the astrology business, and they all say the same things. They have no idea, what's happened. And that was such a big thing because we've never had a Grand Cross in recorded history, and those things are huge. The last time we had anything even close to that was the fall of the Berlin Wall, and that's why I thought there would be something, really big, either geopolitical or possibly, geophysical or geoeconomic, something that would really make things move. But I mean, we're a month past that, 5 weeks, and nothing has happened. So you have to call that a non-event. This is, of all the things that have shocked me in my studies of astrology over these past 30-some years, is that date of April 21st and 22nd. The fact that it had no effect on anything. I mean, it was just business as usual all across the realm of everything that we look at. So I don't know. I wish I could answer the question. If I ever find out the answer, someone will have to give it to me because I wouldn't know where to look. But it certainly didn't trigger anything, that's for sure. But we'll wait and see if we ever get any more information on it. I'm not going to worry about it because, I see failures occur all the time. You have to realize that when you're trading, you have to react on things that don't work in your favor, because that's what you have to do. You have to always protect yourself. Trading's not about trying to go in and make money. It's about protecting yourself. Once you understand that, you have a better chance of being profitable than if you go in there looking for profits all the time and not worrying about your losses. You must worry about your losses first. The profits will come to you if you have a positive methodology, and pattern recognition will certainly do that, but it's certainly far from perfect. But you have to be able to quantify your risk all times and never worry about what your profit's going to be, because when the market gives it to you, the two things we know for sure is that A, you don't know whether you're going to be right or not, and the second thing is you don't know how much money you're going to make. So both of those are unknowns. So those are the things you have to focus on when you're doing this as a trader. Okay, we got the Dow getting back to near even, and the S&P up today, and the cash is still up.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted in since we were talking about probabilities on trade, I posted in the chart for APX. Last week when we were on, it was fulfilling a perfect pattern down there at the 1640 level. It rallied up to just about $1, I think, not quite, and then it just gave up the ghost. And then yesterday it gapped down big time. Once it went below that low that we made last week, and we talked about that, the fact that if it failed, that it was most probably going to go a lot lower. That made it a very, very low risk trade. So I hope that if you did that trade, that you followed, what we were talking about, because once they break these key points, you really have to respect that they're going to go a lot lower. As I'm sure everybody that's, involved at TFNN, because Tom's so involved with gold, and we have, been talking about it for quite some time, we've had the same thing happen in the gold market. We've been looking for lower prices in both gold and silver for quite some time, and now we've broken below the key 61% retracement level on the long-term daily charts of gold, which tells us that we're still going to go lower. And then that's also true of silver, and of course we'll cover those on the commodity markets show tomorrow. But both of these markets are under a great deal of pressure, and it's pushing things a lot lower. Whether they have anything to do with the price of inflation or anything, I don't really think that adds very much anymore. But that's just the way things are actually moving in the markets today. I'll post that gold chart so you can see the fact that we had this really wide-ranging bar that occurred yesterday, and down at the 61% retracement that came in around 1264, and then today we've gone actually lower, and it looks like we want to be heading down to the 1230 level in gold, which would be the 786 retracement of the low that we made from January. We had that $200 rally coming off the double bottom at the Fibonacci number at the 1184 level. We went all the way up to 1384, which was a 786, and now it looks like we're pulling down to the 786, on the way down, and that would be sometime in about 2 weeks where that cycle would come together that goes back from last July through December, and then December, through June. So that's basically a 6-month cycle in gold that seems to be operating, pulling the market down. The real key to that gold market, and we talked about this several times on the commodity show, is the fact that when it rallied, the gold could only just barely made a 50% retracement, and silver could only make a 382 retracement. And that was the real key, that it took 2.5 weeks to make a 382 retracement in silver and also in gold, and that was the thing that was telling us that this market certainly didn't have the power, to go to the upside. This is exactly opposite of what we have going on in stocks right now, is because there's more power being pulled up. It doesn't make any difference where the buying is coming from or any of that. What it amounts to is the fact that the things are going higher, and one of these days the market will finally turn, and when it does, then it'll give us a shot to say this is pretty much what we're looking at. We've got another break coming up here. Hopefully I can get the Treasury bonds in here before the break. Looks like I'm not going to be able to do it, but we'll see. I want to cover the Treasury bonds for sure and see if I can actually get this chart to work, and I'm not able to get it to work. Very strange. I don't know what the problem is, but I'll figure it out. Well, no, I guess I won't. Let me do a longer term one. Maybe that'll help us. Not much, but give me a second here. Yeah, we're okay here. There we go. We're going to be all right. I'll put the long-term chart in here because you can see we're right at a 50% retracement of the high that we made. We're completing a Gartley pattern in here right now on the Treasury bonds, and we're certainly looking for, and here's another example of a very, very weak market, folks. This thing has been going up for 5.5 months, and the best it can do is make a 50% retracement of our high from last April. If you go back to the big high that we made back in 2012, which is a considerable time frame away, you'll see that we've just barely went above the 382 retracement, which came in around 37.23. So we have several of those coming in here, and this is the strongest rally that we've had since the top was made back in June of actually July of 2012. That's when the bonds hit the 150 level before they headed down to the 127. So now we've had this really strong reaction in here, and we are looking to go short Treasury bonds either tomorrow or possibly on Friday, given the fact that we want to see how the market works. Okay, we got the markets reacting a little bit back to the downside, and we'll be back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Ten-4, broadsword to Danny boy. Hello, testing 1, 2, 3. I don't know if I've lost connection to the internet or not. Oh dear. Okay, anyway, I guess we missed Charlie from Massachusetts. He had a question about Priceline, and I posted it into the Tiger Den, and it is making a perfect 61% retracement. I think we've got Charlie back on the line now. Charlie, are you there?
I'm still on the line. I hear you.
Okay, good. I'm sorry we got something happened to the connection here, but we're okay now. You have a question about Priceline?
Yeah, I'm thinking of shorting it here.
This is the spot. If you're gonna, you don't have to risk much here. It's a $1,264 stock, and I wouldn't think you'd have to risk more than $20. That would be maximum. In fact, this is a perfect day because you have a new moon, and you also have it sitting exactly at the 61% retracement here at the 1264 level, and the high today has only been 1270. So, you know, this is really a low risk for a $1,260 stock. Can you get the stock easily? Can it be borrowed to sell? Because
yeah.
I've heard.
Yeah, I've had no problem shorting it right now.
Okay.
It's still available. The question is, I know it'll bounce maybe down to about 1,200, but what are your thoughts about getting below the 200-day at about, I'd say maybe 1,100 or just a little bit above 1,100? You think it could break through?
Oh, with these kind of markets, the way they are, they can do anything they want. I mean, this stock got up to almost $1,400 a share at one time. It dropped well over almost $300 a share, has come back $200 a share. You could easily drop $200 a share down to $1,000 without any trouble in these kind of markets. But the thing that you're asking today is you're looking at a potential short sale, and this is an ideal situation. I mean, from my perspective, you're sitting right exactly at a perfect 61% retracement, and this stock trades very nicely off the numbers and patterns that we look at. So this is a very, very low risk trade, selling it here around $12.65 with about, I would say, $12.75. $10 with all I would risk on this, especially with the new moon today. This would be the spot to take it. If you could buy a put on it, with like a 30-day expiration where you wouldn't, not spending more than the same amount, like 10 points or $1,000, then that might be something else you might want to look at also.
Okay. Thank you very much for the information.
Yeah, we'll see. I'll be following this. I don't follow this stock very often, but because it's setting exactly at this 61% retracement today, I think I'd have to take a look at it.
Yeah, it reminds me very much with the internet days where things were really, really high up there, like the Yahoos and all that.
Oh, yes. Yeah.
And this looks like a peak, just very much like that.
I see a lot of that from 2000, 99 and 2000 in the markets where it took the Dow about 6.5 months to finally make its top. And then it was the NASDAQ that started to bring everything down. But, everybody says it's different this time, and maybe this time they're right.
No, they're not. It's never different. It's always the same.
Usually.
I believe in what you're saying. They can delay it for a while, and things can get pulled here or different ways. But eventually it'll come back to the normal position, and it will follow a normal trend, and it will correct.
It's not nice to fool Mother Nature, they say.
No. I was reading the amount of debt out there in terms of margin, how people are on margin. We're at the highest levels ever in terms of margin, and if this starts to go down and everybody has to start covering or selling, or not covering, selling, then there's going to be a real flood going down.
Yeah, the question is when. The only way you can do it, in my opinion, is to take little pot shots at it. I mean, I've been waiting for this new moon to come in because this is what happened in October 7th of 2007, but this might not work either. So I'm just saying that you got to keep a really close eye on it and not risk very much because it could go up another 8 or 10 days. You don't know.
Right. And the point you're making, really, that's the most important part, is you take little shots at it. And eventually, once it starts to go down, you just keep riding it down, and that really is the key. Just little shots and see what happens.
Well, we'll see what happens. But thank you for calling in, Charlie. I certainly appreciate it.
Yep. Bye. Thank you for the call.
You bet. Okay, I wanted to get back to the bond market here because we are very, very close to we've actually made the 50% retracement in the bonds today. And we're also setting right at a 3 drive to a top pattern coming in here at this 138.20 level. So far the high of the day has been 138.19, so I think we're very, very close to a pretty good correction in the bond market. This thing has had a really good run since we made the Gartley pattern back on March 14th, and it's completed that pattern and has made a 50% retracement from our December lows, and over the last 5.5 months it's been able to rally only to the 50% level. The big thing that's going on today in the interest rate markets are the 10-year notes. The 10-year notes have been the wicked stepsister of the interest rate market. They've been lagging very, very badly, but today they have broken out of the gate and broke out much, much stronger than the bonds, which means the short-term rates are dropping faster than the long-term rates. So it's going to be interesting to see where the rates go from this level. We're at a really critical level in stocks and bonds as we come into this new moon of November the 28th. So we'll have to be taking a look at that. One of the questions that was posed to me during the break was on this Grand Cross that happened on April 21st and 22nd, that they had heard that some astrologers had said that the event is so big that the orb or the influence of when this could happen could be as much as several months out on either direction, before or after. Folks, I don't believe that for one bit. I've been following this type of stuff for a very long time, and this stuff, when it's really right, it's within a day or two, maybe at the most 4 or 5 days on something as big as this. To be 5 weeks past it, I don't believe it. I just think that whatever has happened hasn't occurred yet, and I don't see anything huge out there until August the 4th. So, the market could go straight up. I mean, the old market adage of sell in May, go away certainly didn't work, and summertime is the worst time to be buying stocks, supposedly, but that might not work in again either. So we'll have to, just to wait and see. But the key is, for me, is to watch what happens, with the market this week, because if we go below 1882 in the June futures, then I would say that we're probably getting pretty close to a reversal of at least 5 to 10% in the averages, and of course people will be buying it, all the way down, as well they should, because it's been the biggest bull market that we've had, since Hector was a pup, and Hector's fully grown now, so it's going to be interesting to see what's going to happen. I did want to show the Treasury note chart because it is very, very dramatic, and I have it compared with the bonds, and you'll be able to see it because they really have accelerated to the upside today, and in really strong fashion. We've had almost a full point move in the 10-year notes, and folks, that is really unusual because that's the biggest market at all. It's about 3 times bigger than the 30-year Treasury bond. It's the interest rate that we look at for credit cards, automobiles, mortgage rates. That's the one that they focus everything on. So this is really a big deal, doing what it's doing today. So whether it's going to have a whole leg here and rates are going to continue dropping, we'll have to wait and see. But they are due for a pretty substantial correction when you look at it on the 30-year Treasury bond. That doesn't mean it's going to happen. It just says that's what could happen. So we will keep an eye on that. Now, the next question that I had was about one of our favorite stocks that we look at, and that is Apple. And we're completing a major pattern here in Apple today. We're right up at the 786 retracement. We're within, I think, about a point of the exact 786 retracement from the low that we made, back in April. If you remember, we were looking at Apple as a buy down around that 395, 390 level. The low was around 387, I believe, and now we've retraced. First, we retraced at 61% of the move. That was up around 570. Then we dropped $70, not an ounce, but per share. That was a 15% correction. And now we're up to the 786 retracement of this, and it's completing an ABCD pattern from that August through February period. And we remember, folks, we have a huge gap in Apple between 528 and 568. That was a couple weeks ago when they came out with a surprise earnings stock split. I don't know what it was. It was a Praise Jesus Day in Apple. That's all I remember because it took off like a rocket, and now we're up at the 786 level. So we'll see. The 786 level comes in at 631. The high today has been 630. So within a dollar and a half of that exact high. So we'll take a look at it. Priceline is doing the same thing. I mean, they're different stocks, but it's the same type of pattern. So Apple is doing the same thing that we're looking at. Someone has asked me about looking at the bottom that we had in Apple, and that was one of the easier bottoms because we had made a beautiful 3-drive to a bottom pattern in Apple, and then following that we made a beautiful double bottom Gartley pattern that was happening right around the 1st of July. So it's been a year since we've had this, actually a year and a half since we've had this move. Actually, it's 2 years. Holy cow, where does the time go? And since we've had these patterns complete, so we'll have to wait and see. But, someone mentioned that they've raised the target on Apple to $700 a share. Well, when the stock is trading at $629, to raise it to $700 is no big deal. I wonder where their targets were, when they were at, when the stock was at 703, when everybody was bullish, and then it gave back 50% of its value. And nothing changed in Apple from the time that it did. I mean, Jobs had passed away, but nothing had really changed at Apple when it dropped 50% in value. It just gave a really good buying opportunity down there at the 385 level. We're looking at the same thing in IBM, folks. If you have an interest in buying IBM, this is a spot where you want to look at it because it's making a perfect 61% retracement. You have higher bottoms, and your risk there, you have $181 stock. If you risk just 3%, that's $5 a share. And so, it's a very, very low risk take on IBM. I mean, just a few weeks ago, it was trading at 195. It's given back, 5.5% of its value over the last 3.5 weeks. So that's telling us that, it's down into what we call valuation time based on Fibonacci numbers. And so that's what we would be, taking a look at it for that. So the gold is still looks lower to me. I think we are going to go a little bit lower, so we'll see. The usual thing. Someone asked a question on the new moons and full moons. Which is more accurate, the new moons or the full moons? We've just completed a book, Shane Schmolian and myself. It'll be out in about 4 months, and it's going to go over a whole lot of statistics on this. But the new moon actually has better probabilities than the full moon, and the reason for that is it's at 0 degrees conjunction, and that's with the start of the cycle. So the new moons have more power for some reason in the markets than full moons. However, there have been some full moons that are absolute monsters. For instance, October 7th, 2007 was a full moon. No, that was a new moon. Sorry about that. Well, that was a new moon. But in the bottom of March of 09, we had a full moon occurring at that time. So you do have, variations occur, but statistically the new moon has slightly better probability of success than the full moons based on the studies that we did. And we did this using Alfie Lavoie's software program, and we did 122 years, so we did quite a bit. We've got a call from Stan in Atlanta. Can I help you, Stan?
Yeah, thanks for taking my call. My question is about SQM, Chemical and Mining Company of Chile. They're the world's largest.
Wait a minute. Have you asked about that before?
Yeah, I bought it, and I'm holding 600 shares. I'm up on it a little bit. I'm just wondering if I should hang on to it or sell it here and try to buy it on another dip.
Okay, let me pull this up. I can see, did you buy it down around the 27 level?
No, I bought it right where it is right now. I bought it at 30.57.
Okay, and you are setting right at the 61% retracement on it right now, Stan, and you're up 8 days in a row, 9 days in a row. I wouldn't want to be long that stock right now. We've been up since the 14th of May. Actually, the 15th of May. That's when we had the new moon. Now we're into the full moon. I would not. I would really rather buy that back. If you want, well, this is a risk decision that you have to make. But if you were to do this, it'd be better if you could buy it back a couple dollars a share cheaper, right around the 28.40 level, because you've actually sat with this stock for quite a while, haven't you? Well, it went down and then came back up.
Bought it on the 14th, 13th or 14th.
Okay, then it had the break and then it's come back. I would try to get out of it, Stan, if I were you.
Okay, thanks.
And if it doesn't work, you can call me up and raise hell. How's that?
That's okay.
Thanks for calling in, Stan.
All right, thanks. Bye.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we have a question from Robert in South Carolina about the S&P. Just a minute, and I'll see if I can find someone that knows something about it. Oh, wait a minute. I'll give it my best shot here. Robert, are you there?
Yes, sir.
Welcome
back. Miss hearing from you every week.
Well, I'm back for a bit. We'll see what happens, God willing.
Yes, sir.
What can I do for you, my friend?
Add something to the moon discussion. Chris Carolands of the Spiral Calendar, I'm sure you're familiar with him.
Yeah, I know Chris very well. He's a really smart boy.
Yeah, I think he had a thing about the full moon and the new moon, and I forget which way it went, but something to the effect where spring, the crashes or major sell-offs would occur at new moons, and in the fall they would occur around full moons, or that might be reversed. But he attributed that polarity depending on whether it was spring or fall as far as major events.
Mm-hmm. Well, I agree with that. Now, if you would go back to 2007 in October, that's when the market's supposed to be making a bottom, because October is the worst month for stocks, and yet we were making a high in October of that year. And here we're coming into the summertime, which is usually the summer doldrums, and the market's selling off, and here we are making new highs. Whether that means very much or not. Now, the work that we did with the full moons and new moons, it basically corroborated what Tom Pelk did in London. He's one of the analysts for Nomura Securities, And he also came up with the same statistics that if you bought on the new moon and sold on the full moon, you did far better than if you did a buy and hold strategy during that time. But during the opposite times, when the market is bearish, if you sell on the new moon and buy on the full moon, it makes a totally different parameter. So we have to wait to see what happens today and tomorrow to see if this is going to be a short-term high or not.
Oh yeah, well, as far as the S&P was concerned, I was looking at ABC up we have from say April the 13th.
Oh yeah, there's no question it's completed that. There's no question about that. Yes, sir. I posted that into the room early this morning when I first came on the air.
Well, what I'm looking at is on the futures. It hasn't completed yet. It would. I'm looking at April the 13th as the low point, and then the B point's the 24th of April, and the C point, I guess that's the 27th, 28th, somewhere in there, and then 1923.25 is being my D point.
Well, I'm looking at it, and the way I'm looking at it is 1912 is what I'm watching, because I'm going back to the low on the 28th of April. That was a very significant day for me because I was in surgery all day that day, and that was a major low in the market. And then we went up into the full moon of the 14th, and then we came down hard for 4 or 5 days, and then we've gone up into the new moon right here, and that to me measures to what we went to today, which was 1912. Now I could be wrong, but that's the way I look at it.
Well, you're not wrong. I mean, we know that these ABCs overlap each other like crazy. I'm just saying there is another one that you could look at.
Oh, yes.
Starts from the 13th, and we using that one, we could spike up to 1923 and finish that one.
Yes, sir. There's no question about it. That could very easily do that, and maybe that's what the transportations is trying to tell us, that it does want to, to go a little bit higher.
Yeah, I was just hoping that it would nail it just precisely at 2:41 when the moon is exactly new. It did that in 2000 when we had that giant sell-off day where the NASDAQ was down 600-plus points, and now it's down 700.
Listen, thank you for calling in, Robert, and have a wonderful day, okay?
Yes, sir. Take care.
Live every day in an attitude of gratitude and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.